Today is October 16th. I want to talk a little bit about, the news, what's happening. There is obviously a government shutdown. How is that impacting student loans? I want to address that. I also want to talk specifically about mortgage since I know we have a lot of borrowers coming through who are trying to buy. With the shutdown and the backlog of about a million people who are trying to process IDR, income driven repayment, and PSLF, what are we able to achieve? I want to share some of the results. We're able to get people's paperwork processed, not forgiveness, but income driven in about 7 days flat. That was a report I got from our customer support team yesterday. So that's really good news. I want to talk about some of those details on how we can help people achieve that. And then last I want to talk a little bit about bar defense with the furlough and the shutdown and having so many federal employees be on leave. It's an opportune time for those who qualify for bar defense to consider filing, because even if the Department of Ed doesn't review your application within a specific amount of time, you will get your loans automatically discharged if they don't review it and deny it or accept it. Then you'll get your application automatically discharged. So I want to talk a little bit about that as well. In the middle portion, I'll talk a little bit about what's happening in the mortgage market as well. I forgot to mention that. So let's dive in. First and foremost, almost 1,500 of the 1,700 federal employees are going to be furloughed from the Department of Ed. That essentially means that the ultimate PSLF, public service loan forgiveness application discharge, will be on hold because the Department of Ed is operating at a much lower capacity. So if you are in queue to get your loans reviewed for forgiveness, just keep in mind that that may take a while with this shutdown. Number one. It's funny because the Secretary of Education came out and said that people are still expected to make their payments, even though we're not going to work to forgive your loans. You're still expected to make payments, even if you're supposed to get your loans forgiven. So of course, that doesn't make any sense, but that's what's expected. Even if your loan should be forgiven, the advice is to pay it, and then anything extra you pay back, you overpay, essentially, they will refund you. So that's first and foremost. The second item I want to talk about now is borrowers were able to process their paperwork and get responses and income driven in 7 days flat. Really proud of my team, is because we file everything directly with the servicer. LoanSense helps borrowers file everything directly with the servicers. We also understand all the mortgage guidelines. So if you're coming in trying to get a Fannie Mae loan versus an FHA loan, we will understand how student loans are treated. We will help get you the documentation for mortgage close, and we will file your paperwork, assisted filing. Essentially, we'll do it for you. You just sign and approve the submission, and we file it directly with the servicer. So it's not waiting in any of Department of Ed queue. Okay. So let me talk right now as somebody who's purchased multiple homes. I'm a house hacker. My current house produces about $3,000 of income a month. We live in a portion of it. I have a tiny house in the backyard. The point is, I never bought a home in a 2% interest rate market. By the way, when I bought my house, it was about a 4.25 to 4.5 interest rate market, which obviously is still better than a 6 to 7% interest rate market. But let me tell you the opportunity that a 6 to 7% interest rate market presents relative to a 2, 3, 4% interest rate market, which is that right now, especially with the market, it is a buyer's market. So there's more opportunity to win a contract. There's less competition in the market. So it's actually an opportune time to buy, even if the interest rate isn't optimal. The interest rate not being optimal is the reason why there's less competition in the market. So if you are a borrower who may not have the highest amount of down payment savings, may not have the best of credit, this is the market to get your loan approved. As unfortunate as it sounds, in low interest rate markets, and investors come in and all this, it becomes hyper competitive, and it kind of makes it actually challenging for first time buyers and those with any type of credit issues or any type of imperfect profile, right? I personally think when buying, it should be illegal to know the financing details of the buyer, because it just makes it so that sellers can discriminate and say, basically, I'm not going to accept anybody with with an FHA loan. I'm not going to accept anybody with a VA loan. That's like, to me, a form of discrimination that somehow is legal. To me, that makes no sense. If anything's to be changed in the law, it should be that a person selling their house should not know the financing details. And in fact, when I go into contract, regardless of how much down payment I'm going to put, because ultimately those numbers can change in the contract, I'll just list 20% because why not? It could be 20%. The seller doesn't need to know. It's none of their business. They do not need to know what amount I'm putting down. I try to shoot for 20%, but that doesn't mean that, let's say, insurance ends up, this is what is happening in Florida right now. When I went to buy a home last, insurance prices end up being way higher, tax prices end up being way higher. And so you think you're going to put 20% down, but then you realize, well, actually, with all the different costs, I mean, obviously putting down more would reduce those monthly costs, but also with all the closing cost fees and all the fees that you don't anticipate also costing more, sometimes people fall short of what the specific percentage they say they're going to put down is. But regardless, I put whatever I think I'm going to put down in the front that's higher in the contract, because ultimately what ends up happening in financing really the seller doesn't really need to know your financing details, is my opinion. So people are having hard times getting their contracts accepted because they're putting FHA. Well, I wouldn't let them know. I would just say other loan, like other loan. Like, I don't know. I feel like any information you put about your financing that makes it so that they can discriminate against you should not be done. Like, I'm sorry that some people might disagree with me, but I think as an advocate for first-time buyers, I think that should be illegal. Because it just creates discrimination. Like, people who serve our country and take a VA loan, why should they be discriminated against? I just think that's ludicrous. So I use what's called like DSCR loans, investor loans. So I do put other, and what I realize is there's still discrimination because they prefer cash buyers. But another technique I use is I'll put other loan, and then I'll have my lender call the real estate agent to reassure them that I'm credit worthy and that my loan will be originated. So I say that because that's another tactic to help ensure that the loan will be originated. And if you feel pretty confident your loan will be originated, another way I go about my negotiation is I make my money hard earlier. Hard means my earnest money deposit will be non-refundable at an earlier date to help the buyer feel comfortable with accepting my offer. So for instance, I'll put down a higher earnest money deposit and I will make my money go hard earlier so that they see that I'm confident that my loan will go through. And at the end of the day, your broker or your lender can always get you out of a deal by saying it's a financing contingency fall through. So you'll still be able to get your earnest money regardless of what you offer and how early you make the money go hard. But it's just a way to exhibit confidence in your ability to get the deal done for them, right? Those are some pro tips. I know my channel's like focused on student loans and I don't usually come on here and share a lot of real estate hacks, but I am a real estate investor and I don't really ever call myself a real estate developer, but I have purchased multifamilies and remodeled them. So I really enjoy the art of making a home. I love doing that. I really love that. So outside of student loan guidance, I'm happy to provide more insights like this, but I'd like comments below if you're interested in that. So now that I went completely on a tangent, let me talk a little bit about borrower defense, because now's an opportune time to apply for borrower defense if you qualify. What is borrower defense? If you went to a for-profit school that defrauded you and you didn't get the value in your education, you must apply to borrower defense. If you have not checked out, I'm going to link a video somewhere here, but also in the description below on our borrower defense process. If you have not applied for borrower defense and you qualify, or you went to a school that defrauded you, you didn't get the value, we can assist you in filing that entire 21-page essay application. And there's a pretty long wait time to get the loans discharged. But the great thing is if the Department of Ed doesn't get to it, then they have to give you automatic discharge. And with the rate they're currently working and how they're working, you might just get your loans discharged. They won't even have time to look at anything. But of course, we have nothing but a great track record of submitting strong evidence. So I hope you found this video helpful wonderful. I will see you in the next video. Please, I'm so bad at this. Please, in terms of asking people to like and subscribe, please like and subscribe if you like this content. Give me some thumbs up below if you want more real estate content. Have a great rest of your week.